And now with the latest business and market news, here's Kate Tozer.
Thanks, Alan. It was a shocking week on the markets, the worst in 2 months, in fact, with new signs the American economy is slowing. The Dow extended its losing streak to 7 straight sessions, with the major indices all losing about 0.5%. The end of temporary hiring for the US Census saw employment fall for the first time this year. Non-farm payrolls dropped by 125,000 in the largest decline since October, although 83,000 private sector jobs were created in June, mostly in large multinational companies. So overall, the unemployment rate dropped from 9.7 to 9.5%. But that didn't stop the mounting gloom among economists, as a lot of Americans have simply given up looking for work.
Don't take any hope from the drop in unemployment. People are just very discouraged, and they're so discouraged that they just stop looking. And when you stop looking, you're no longer counted.
And Commerce Department figures showed new orders for factory products dropped the sharpest since the middle of the recession. Orders fell by more than 1% in May, reversing 9 months of gains. Over the week, most major global equity markets were weaker, and Australia followed the slump, falling 4%. Tom Elliott has been watching the latest market news.
And a very happy new financial year to all of our viewers. Well, you could be forgiven for thinking there was only one big story in the markets last week, and that was the government's decision on Friday to water down the mining profits tax. Surprisingly, this didn't have a particularly positive impact on the markets. In fact, over the week, the share prices of most of the major resource companies were down. It was the same story for the mining service companies. Their share prices were down over the week, and even for the coal seam gas sector, weaker over the last 7 days. The gold sector early in the week, the gold price did hit a record high, and the share prices of Newcrest and Lihir jumped up, but the gold price came off later in the week, and so did the share prices of our 2 major gold producers. In takeovers, well, we saw AGL launch a final 15 cent a share bid for Mosaic Oil, and that's being considered by the Mosaic board. Don't know how they'll react to it. Also, on a more friendly basis, Wattle received a $1.67 a share bid from American company Valspar, which Wattle's board is going to recommend to its shareholders. And now, taking a look at the market's best and worst performers over the financial year, winner is Western Australia's Coalspur Mines, up a whopping 575% after completing a highly prospective feasibility study on the company's coal assets. Loser of the year, however, was Elders, down 86% after several profit downgrades.